Okay, it's official. I have a brand new favorite wheel stock. We've talked about the stock before, but it's officially now my favorite stock to do the wheel with. We're going to talk about that. Also, too, very, very valuable. I've been making some in the money covered calls, and people in Discord are like, whoa, whoa, which happened a lot when the market was up. But now that the market's down, it really hasn't happened in a while. So I want to talk about like times where you can place an in the money covered call, meaning your strike is below the current share price and why the hell you would ever possibly want to do that. So getting right into this, guys, first, my favorite wheel stock is definitely Google. It has been, as far as like premiums versus investment, hands down. Now, granted, guys, I know $9,000 is a lot of money, but the wheel isn't about like diving into these big stocks, right? I've been wheeling now for 5-6 years, and I started with $20 stocks, $10 stocks. So Google is like a bigger play for me that took years and years of building up to. So please, don't get in the comments and tell me, oh, blah, 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 who has nine? Like, build up to it. Instead of complaining, just build up to it, please. Because when you do, you'll see some benefits. And what I've seen is not every $90 stock has the premiums that Google has. It just checks all the boxes for me, with maybe the exception of a dividend when it comes to the wheel stock. But this is just a quality stock that I've just been making money on. It's easy. The price action is pretty standard. It goes up, it goes down. It's easy to manage. It's got high liquidity. It's easy to roll. Just freaking awesome. And here we are looking at it. It's currently up today. So today would have been a good covered call day. But guys, right now you can see I have a put open. I actually got assigned on Google a couple weeks back when I was sick and I missed assignment. I couldn't roll it. Things happen. And I actually got assigned. Let's go to the history. I got assigned at $92. And here's really how that $92 assignment really happened. We can go back, and I've talked about Google. I'm going to make a full video, guys, next week about how much money I've made the whole year trading the wheel with this portfolio. But consistently in the $80 range when you are going to be selling calls. $82, $81. This one was $161 that I was able to buy back for $3. That was a huge one. 66 at 98. Then I bought that one back for $7. So that was another $59. Then I sold 65 at 91. Now that didn't really work out for me, so I needed to roll. So I rolled it up to 92. I got 10 more dollars. So now we're at 75. And then I needed to roll it again, and I got another $25. And this is where I got assigned at 92. Now, when I get assigned at 92, my goal with the wheel is to now go back and purchase puts at 92, right? That's going to keep my basis about the same. It makes math easier. So what I did is I went right back in and I sold a put for $92. I got another $29, and I bought to close that one for $2. I then sold another put for $92 at 11. It did not get assigned. So these I'm not really looking to roll that much, unless I really, really can, and we'll see that in a second. So I wanted to get assigned at 92. I want those Google shares back. This one expired worthless. I kept that entire bag. I sold another put for now $111, and gosh, I want that assigned. But what happened was Google tumbled in the last couple days. If we can go back, let's go back now and see what happened there. This right here in the last week, this was an awesome week if you are trying to write puts. So right here, here's where I would have got assigned at, but 92 at the beginning of this week. I'm like, whoa, Miss Lippy. If this thing's going to continue to downtrend, I am going to roll down if I could take the opportunity to get even more premium and then also get these at a lower price than I sold them. So what I did was took that $92 strike that had an expiration of 12/16. You can see that here. I bought to close that for $207. It was in the money. It was expensive. I had to buy it back. But the beautiful thing here was, if we look, I was able to roll down to 91. That releases $100 worth of collateral. And then if I get assigned, I really made $100 on my last assignment. If that all makes sense, I got to lower my strike by $100 and push it out and get $6 more. So now this whole entire process here is $117. And if I get assigned at 91, that is awesome news. Now we can see with Google, they've gone down since then, and now they're trading at 89. But this doesn't expire until the end of the week, so it's not that big of a deal. I don't mind getting assigned at 91. But if this continues to pull back, I'm going to roll it down again. Shit, maybe I'll get it for 90. But this is, guys, the beauty of being able to roll stocks and understanding that wheel. Once the wheel gets assigned, it's kind of a good thing because you know exactly where you need to go back to, right? I got assigned at 92, the put's at 92. Simple for me, no big deal. And like I said, right now, that's up $50 for me. What's today? Today's the 21st, so this is going to expire in a couple days on Friday. This is beautiful. I want to get assigned on my puts. My calls, I tend to roll them. I don't really want to get assigned on them. It's kind of annoying for me. SWBI is a different animal, and we'll talk about that in two shakes of a lamb's tail. But listen, Google, I'm so glad that I built up shares on it. I am so glad that I built up shares on it. And I think this is going to be a stock that I'm just going to continue to wheel into the future, guys. I do have a long call on Meta, which is, as you can see, in the crapper. With this portfolio, guys, I'm going to be getting rid of all my leaps. This portfolio is going to become strictly a wheel portfolio in 2023. So subscribe if you're into the wheel strategy. I'm going to show you what I can turn $12,000 into. I'm really going to go for almost 50 to 75% return, and I think I can do it. On this portfolio, I'm not going to put any money in. We're going to start at like 12 grand, and I'm going to make this thing easily. I'm going to get it up to 20 in 2023. I promise you that. The other stocks that I hold 100 shares of that I can wheel right now, shit, Camping World's up today. Let's write a call on it. Let's do it. If you guys don't know how to do this, all right, this is a green day. It's up 2.5%. We want to be able to write calls on green days. Here's the threshold, and here's everything. And I got a dividend coming from them. Let's go, Camping World. See, my average cost is $25.50. If you're new to the wheel, that's your first benchmark as far as where strikes should be. For me, I have an adjusted basis. I know mine's a little bit lower, but for all intents and purposes in this video, I'm going to use that $25.50, and I will not write a strike below that, and I can't lose. So what I'm going to do, let's go trade options. We are going to want to sell calls against it. If I look at $25.50 right now, that ain't getting me jack diddly. Let's go down to this one right here. Will that get me jack diddly? That'll get me $1 as well. Now here's where it's going to get a little bit more advanced, guys. I know what I'm doing, and I know that my adjusted basis, meaning my basis after my dividends and all the premiums that I've had for selling this, is actually below the current share price. But to be safe, I'm going to find myself a nice 0.2 delta. That's going to make things easy for me to manage. Also, you have to understand this is the time before Christmas. I'm going to be busy. I'm going to be drinking. I'm probably not going to watch the markets. So what we're going to do is we're going to see what I can get here. I can get $8 for a $23 strike. To me, guys, that's not worth it. If I want to check the markets next week, I can. Don't rush into calls. You don't need to. Like I said, I have to know myself, and I know that I'm going to be busy between the holidays, and I'm not going to be able to roll if this goes against me. So I'm just going to push it aside, and we'll wait to the following week. SWBI, guys, is what I'm selling in the money calls on. We can see my current basis for this stock in particular. I think it is $15. That is not true. I've held 100 shares of Smith & Wesson for a very, very, very long time. I mean, when was it $15? It pretty much hasn't been $15 this whole year. Well, in August, it spiked up and hit $15, but it's been down the whole year. And really what this has happened is now the options, if we look at the options, they are monthlies, which is really, really annoying. And also, too, if we look at the strikes, anything out of the money is really just not worth it. I love I love SWBI. They are in my dividend portfolio, but as far as wheeling, it's just not that great. So you can see right here, I wrote an in the money call on this, -1. I sold a call. I got a bunch of money. It's below the current share price. I want to get it assigned. And then I'm pretty much going to say, thank you so much, SWBI. You've been a great wheel stock. We had a great time together, but I think it's time we part ways, knowing that my adjusted basis is below 750. So keep a spreadsheet, guys. Keep spreadsheets and understand what your bases are below. And then you can make these plays to make a little bit more money. I write in the money calls when I'm ready to move on from a stock. That's generally the only time I'm going to do it, is when I'm ready to get assigned. Because like I said, on calls, I don't really want to get assigned, but I will let it happen if A, I think I'm going to roll it and I want to get some heavy premium, or B, I want to get rid of the stock and move it out of this portfolio like what I want to do with SWBI. Until I see you guys in the next one, stay positive, work really, really hard. Always please be kind to others. Guys, happy holidays. I hope you enjoy yourself. Be safe out there. Nothing good happens after midnight, and I'll check you on the next video.